UBS takeover of Credit Suisse and global central bank action drive a relief rally in US equities. All eyes now on the Fed, which is largely expected to raise rates by 25 basis points tomorrow as it looks to continue its fights against inflation in the face of the global financial turmoil. European markets end a choppy session higher as investors digest the fallout of the UBS Credit Suisse deal. Stocks in the Asia-Pacific opened with a gap up on the back of the strong global handover. SGX Nifty 2 indicates a higher start for the Indian market. Crude bounces off 15-month lows. Prices rise about 1% to over $73 after hitting levels of nearly $71.50 a barrel in early trade. In the latest revision to windfall gains tax, the duty on crude petroleum will reduce to 3,500 rupees a ton from 4,400 rupees a ton earlier. The duty on diesel has been doubled to 1 rupee a litre, while that on petrol and aviation fuel continues to be nil. Chinese Premier Xi Jinping stresses close ties with Vladimir Putin on the first day of his 3-day visit to Russia. Both sides exchange views on the Ukraine war, while Putin once again says he remains open to negotiations on the issue. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking this Tuesday morning. A lot to catch up on, and there is some relief rally that we are seeing in the global markets. So let's take a look at what the Asian markets are doing on the back of that. It's a green screen, and that is what we are seeing as far as the cues from the Asian markets are concerned. Hang Seng, which was down 3% yesterday, is up 0.5% today. Taiwanese index also higher by 0.4%. This one was down around 1.5%. We also have the likes of Kospi, which is higher by 0.7%. Shanghai is higher by 0.3%. So yes, the rally, or at least the relief rally that we saw in the US markets, is something that is reflecting in the Asian markets as well. The Fed outcome is expected tomorrow, and that is something that investors are watching out for. SGX Nifty ahead of which is indicating that the start for our own markets could be well in the green. A 60-point uptick is what this index is suggesting. Remember, it is above that 17,000 mark, and we did see some recovery just at that 16,988 mark yesterday. So important levels now to watch out for on the Nifty as well. And as I said, a relief rally in the US markets on Monday with the Dow Jones surging over 1%. The S&P 500 was up about 35 points and the Nasdaq Composite closing with gains of 45 points. All eyes are now on the 2-day FOMC meeting of the Federal Reserve, which begins today, and it is widely expected to hike rates by 25 basis points. CNBC's Bertha Coombs gets a wrap of all the action on Wall Street.
Markets closing higher to start the week. Investors cautiously optimistic that the global banking turmoil could be closer to stabilizing. Gains following a forced takeover of Credit Suisse by rival Swiss bank UBS, engineered by the Swiss government. Meantime, the Federal Reserve is set to start a 2-day meeting tomorrow. U.S. regional banks here at stateside saw their stocks rebound after big losses last week. The Dow finished up about 1.25%. The S&P 500 gained nearly 1%, and the Nasdaq just under 0.5% for the day. Sources are telling CNBC that J.P. Morgan is advising First Republic on further strategic alternatives, including a capital raise to keep the regional bank afloat. J.P. Morgan and 10 other banks announced last week that they were depositing a combined $30 billion in First Republic after it suffered from large cash outflows in the wake of the collapse of Silicon Valley Bank and Signature Bank. The stock was hammered nonetheless over the past week, and today it was down another 48%. So investors aren't yet ready to believe this thing is over. Meantime, a fresh round of layoffs from Amazon, the tech and e-commerce giant, announcing it will lay off 9,000 more employees in the coming weeks. Cuts are on top of layoffs at the end of last year that affected more than 18,000 workers. Amazon made the decision to lay off more employees as it looks to streamline costs, something that's very popular these days among big tech firms. That's what's happening here in the U.S. Now back over to you in Mumbai.
Okay, all right, Bertha, that was all the U.S. market action. It's time to listen into some important opinion on the banking crisis and, more importantly, the outlook for the Federal Reserve coming in from former U.S. Treasury Secretary Jacob Lew.
You have this mismatch between what's happening with deposits and what's happening with stock prices, and it's fundamentally because the risk to shareholders remains real out there. I think the fact that they did the backstop to protect depositors was the right thing to do. Even this week, they're dealing with incredible uncertainty. I don't think they'll decide until they see the data over the next couple of days. What I do think is they have to thread a very small needle. They have to show that they're continuing to fight inflation, which is still high, while they're taking account of the fact that financial conditions are going to slow the economy down. I would think that they'd be looking at everything from 0 to 25 and everything in the middle.
Okay, with that, let's move on to European markets now. They also closed higher, reversing losses in a choppy trading session as investors reacted to the news of the emergency rescue of Credit Suisse. UBS gained even as Credit Suisse shares tanked. Both the French CAC and the German DAX closed over 1% higher, and the British FTSE ended 68 points higher in trade yesterday. In a testimony to the European Parliament, ECB President Christine Lagarde said banks in the Eurozone are in a comfortable position with more than sufficient capital and liquidity, and the ECB is ready to step in as and when required.
Let me also remind that we are monitoring market developments closely and stand ready to respond as necessary to preserve price stability and financial stability in the euro area. The euro area banking sector is resilient, with strong capital and liquidity positions. In any event, the ECB's policy toolkit is fully equipped to provide liquidity support to the euro area financial system, if needed.
Okay, that is some important opinion coming in from the ECB chief. With that, we'll slip into a short break. Up next, we'll tell you how these global cues could impact our own markets. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18, and this is time for our Power Prep segment. Our research team is joining us to tell us what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Sonia, let me come across to you first up. Some relief rally underway?
Oh, absolutely. There is a relief rally across most global markets. So if you look at it, the Dow as well had a rally of almost 400 odd points. This is on the back of US banks stepping in to aid First Republic. So big banks, including banks like JP Morgan, have indicated that they will expand their efforts to support First Republic Bank. Remember, 11 US banks have already deposited $30 billion into First Republic Bank as of Thursday, and now other options are being considered, including investing in the bank. The European markets closed higher as well. The DAX was up about 165 odd points. For our own markets, though, the Nifty is very close to the September 2022 low of 16,818, and we had a steep sell-off yesterday. So even if some recovery comes through, some relief comes through, perhaps that could get sold into, as has been the texture over the last many days. There was large selling by FIs yesterday. Once again, FIs sold over 2,540 crores, and put together, FIs have now sold about 11,600 crores in the last 11 days. The next big cue to watch, of course, will be the US FOMC policy on Wednesday. The expectations are that there will be a 25 basis points rate hike by the US Fed, but all eyes will also be on any developments as far as the banking, the banking situation is concerned, the banking crisis in the US, and how the Fed reacts to that. That data will also be awaited. But for now, the SGX Nifty is indicating a relief rally. However, this has been a sell-on rally market, so prudent to be cautious.
Okay, all right. Thank you so much for all those cues, Sonia. But a lot of stocks that will be in focus as well. Abhishek has that list.
Well, to begin with, ONGC, IOC, HPCL will be in focus. There are changes to windfall gains tax. Duties on crude export is being cut by rupees 900 per ton to about 3,500. And duty on diesel is being doubled to rupee 1 from 50 paisa earlier. However, duty on petrol and aviation turbine will continue to remain nil. RVNL is in focus because they have formed a JV with Ms. Jackson Green for clean energy EPC projects globally. Uno Minda will be in focus. They will consolidate their alloy business by acquiring a stake in joint venture entities across India. Adani Enterprise hopeful to obtain financial closure for green PVC project in next 6 months. Indian Oil NTPC in focus because Indian Oil will be, and NTPC Green Energy will form a joint venture for setting up renewable renewable energy power plants to meet the requirement of new projects that IOC has. And PNC Infratech, they have received orders worth 772 crores, which will get executed over a 30-month period time. PCBL is in focus because pre-commission trial run of first phase of their 147,000 metric ton greenfield carbon black manufacturing capacity in Tamil Nadu is being set up. J. Kumar Infra, the construction of airport depot in Bangalore Metro Rail project phase 2 for a total cost of 182 crores is being done by a JV. And Dwarikesh Sugar, the last one in focus, they have declared interim dividend of about 200%, and the total outgo is about 37.7 crore. The final date or the record date is on 31st March 2023. Back to you.
Okay, all right. So those are all the stocks and news today. Finally, let me go across to Nigel, who's joining in all the cues from the F&O space. Nigel?
Well, morning. Yesterday, we did see a bit of a relief rally, but the FIs, they continue their shorting ways and they added more than 20,000 short contracts. In terms of positioning, well, the net short positions, well, it's even more than what we saw at the outbreak of COVID. So close to around 200,000 contracts on the net short side. On the option side, well, they bought more puts. So in case things go wrong, there's a bit of a cushion out there. But what's telling you that the upside could be capped is because the way they're writing calls as well. Close to around 95,000 calls is what they wrote in trade yesterday. There seems to be a bit of a strategy that's playing out, and maybe a short straddle is playing out at around that 16,900. That is, you write the call as well as the put. You pocket the premium out there. And the broad range you're working with is around 450 to around 500 points, and the range should come up for you at around 16,700 odd to around 17,150 odd. The levels to track, well, the expecting first bit of resistance at around 17,150, though the 20 DMA, well, that will be the next hurdle. On the downside, 16,850, that's been the buy zone for the bulls. While on the Nifty bank, the 200 DMA, that remains elusive. If you can get past that, then you're bracing for a bigger short covering bounce. SGX Nifty suggesting a positive start. Let's see how long we can stay well in the green.
Okay, all right. Thank you so much, guys, for joining us and prepping us up for this crucial trading day ahead. Well, let's move on and talk about the Adani Group stocks because they came under pressure in trade. 9 out of the 10 group companies ended in the red, and the group has also put on hold a 35,000 crore rupee petchem project as it hopes to obtain financial closure in 6 months. Rajiv Jain of GQG Partners, who invested nearly $2 billion into the Adani Group, does not want the conglomerate to stop growing. Speaking exclusively to CNBC-TV18, Jain said it would be a mistake if Adani Group slows down growth, and he does not want them to change anything to please the market.
So our view is that they need to keep pushing for growth while managing the debt level, which I think they've already done that. I mean, they announced some of the shelving of the project, so on and so forth. So I think it'll be a little more manageable from the debt perspective, although we are not concerned as the current point from a debt side. But I think the objective is to keep growing. Look, I think it'll be a mistake to slow down to get the debt levels down. I think these businesses are supposed to be levered. That's the model. So debt has to be in a sort of in a measured way. However, our view is that don't change anything to please the markets. We feel that these are still unique assets. I keep reminding everybody that it is not a service-oriented business where I tell you something. There's a regulator in between. There's somebody's getting power, which is decided by a regulator. So we actually do not feel that as a very risky bet. And as I said, our typical style is we have a position, we actually keep working on, and then add.
Welcome back. You're still watching Power Breakfast on CNBC-TV18. It's time to talk commodities now. A lot of action in the commodity space. Manisha Gupta is joining us now. Hey, Manisha, good morning.
Thank you for that, Sonal. Well, we saw 12% of decline in the crude oil prices in the previous week, and yesterday's opening was with nearly 4% of a decline. But crude clearly seems to be pausing that kind of a decline, and the closing yesterday was nearly a percentage point on the higher side, and we are trading in the positive right now. The expectation that the global banks will avert a wider banking crisis is what has been supportive. The U.S. Fed may also either pause interest rates or hike by just about 25 basis points is what the markets are also factoring in right now. And add to that the strong Chinese demand, which seems to be supporting in the markets right here. Markets also will watch out for the OPEC and allies meeting, which is on 3rd of April now. As of now, we do understand that the group has agreed to cut 2 million barrels per day until the end of 2023. Some support clearly seems to be coming in for the industrial metal space, which was looking at a decline for last many sessions now. So whether it's copper, which gained up by a percentage point overnight, or aluminum and zinc, we have seen positive trades continue in Asia markets also right now.
Okay, all right. So that's all the update from the commodity markets. Thank you so much, Manisha, for joining us with that. With that, let's also get to the latest in the Mehul Choksi case now. The fugitive diamantaire is no longer on the Interpol's wanted list. The global police body dropped the red corner notice against the businessman based on representations made by him. A spokesperson for Choksi said that evidence indicated kidnap, torture and attempted rendition by the Indian government, and the decision to delete the red notice only strengthened these concerns. Okay, with that, we'll take your leave on this edition of Power Breaks with the news that the Asian markets are up in the green, and SGX Nifty 2 is indicating that the start for our own markets could be higher by around 60 odd points. Stay tuned. Bazaar Morning Call comes up next.